Good morning, people. Morning, morning, morning. It is June 20th, and this month just flew by fairly quickly here as we're wrapping it up. We've got one more week after this weekend. It's Thursday, so you know how these days go. Yesterday we had a holiday in the U.S., so the markets were closed, which was very weird. Right in the middle of the week on Wednesday. Fair enough, right? Futures trade until like 1 p.m. And then starting the first week of July is a kerfuffle of market closures as well for July 4th. Now, so far this morning, well, last night, I guess, we had a pretty aggressive bid into new all-time highs for both the Nasdaq and the S&P. And what's making major headlines is Nvda. So Nvda has now surpassed Microsoft and Apple to become the world's most valuable company, the largest company based on market cap. This thing is up 180% year to date, and we're up a decent bit here pre-market. So it's more than tripled its value in the past year, driven by surging demand for AI chips. And what we've seen is Nvidia will own the AI market for the same reason that Apple owned the mobile market. And Apple has sadly fallen behind this AI craze as they're just scampering about to get into the race right now. So there's a potential, like a lot of people are looking at the projections for market caps in the coming years for Nvidia. Right now, as of, well, I guess Tuesday, markets haven't opened yet, but as of now, right, the market cap is probably a bit higher than it's saying right now, but it's over 3.3 trillion dollars in Nvidia, right? You can look at the market cap here on TradingView. What else we have is, if we take a look at Microsoft's market cap when it loads, 3.3 trillion, just the low 3.3s, Nvidia high 3.3s. We also have Apple to take a look at here. They're neck and neck realistically. Apple most recently hit a 3.286 market cap. So Nvidia is still at the top of the leaderboard here, and it's gapping up pre-market, putting more upside pressure in the market cap itself. So people are trying to speculate Nvidia's market cap over the next few years, right? Some people are throwing numbers out like $5 and $10 trillion, which is obscene at that point, right? If this thing triples in value, they're going to be forced to split yet again. The thing's looking so parabolic, it kind of looks like it might just turn over and start trading backwards even. But overall, as long as there's general strength in Nvidia and the overall tech and chip sector, is very hard to call tops on this. Now, this seems like a just perpetual upside in the markets, and it's a melt up realistically. Tomorrow we have options expiry on futures, options, right, indices, stocks, and the rollover, right, the quarterly Opex, which is a big thing. There's going to be a lot of volume changing hands, and we've already seen rollover week has been a bit dicey so far. So there's going to be kind of choppier, dicier movement expected, or just kind of weird volatility expected for tomorrow. So we'll be streaming that. I'm reducing size very drastically, and we'll see how that shapes up. But overall, we've had a shorter week. Solid amounts of volume. Actually, volatility has been fairly low as we've just seen this upside melt up, just continuously press. Now, some of the other news that's hitting the wire here, the federal budget deficit is expected to swell to about $1.9 trillion this year, according to the Congressional Budget Office, which was higher than its previous estimate of $1.5 trillion. And excuse me, this takes into account increased spending from student loans and Medicare, as well as the recently passed bill of $95 billion in foreign aid. So national debt is even poised to top $56 trillion over the next 10 years, or 122% of the GDP, surpassing the 106% seen in 1946 after World War II. Meanwhile, the Eurozone is facing debt issues of its own, the ECB warning 8 of its members, including Belgium, France, and Italy, of their excessive budget deficits. So we're starting to enter a period where these markets are excessively high, rates are still high, and we're starting to see these overall global risks in economic environments. So Nvidia 10 trillion market cap in the next 10 years, possible, but we're starting to get into a point where things are looking shaky, right? As bullish as I might be, I'm even a little concerned as how the trajectory is going in these markets. So today, if we take a look at what's going on, we've got housing starts and permits. Initial jobless claims came out pre-market, along with the Philly Fed Manufacturing Index and the current account. We have Fed's Kashkari, I believe he's speaking now. We have the Atlanta Fed's business inflation expectations at 10 a.m. EIA petroleum inventories. Then we got Fed speakers into the end of day at 4 p.m. Fed's Barkin speaks, the Fed's balance sheet after that, and at 10 p.m. Fed's daily. So we're starting to see a decent bit of that news start kicking in yet again. And then next week, I haven't looked at the news, but we're in a full trading week next week, which should present a little more volume after the rollover period. So when I look at this, looking at this market right now, we'll take a look at the S&P 500. We had a solid short here pre-market. I know, into all-time highs, very, very aggressive. But the way I see it is the market wants to hunt better buyers at lower prices after we've seen this large volume, this large expansion with very little volume. The reality of the situation is if we start crossing under this like 55-60 area, we accept into this minor distribution lower, and that could kind of break down the plans for this buy side, right? Maybe this is one of those days that turns over, and I'm just going to be using that 55-60 on the SPOOs as a pivot and treading very lightly because yesterday was a holiday, right? We've seen markets exceed all-time highs right now, 55.88 on the SPOOs before turning lower here pre-market, pulling back a little, and then we'll see how they shape up throughout the day. But major pivot 55.60 on the SPOOs. I'm just gonna wait for that area and kind of decide what to do from there. If there's continuous buying, fine, right? We found buyers and we'll flip it back up. It's just hard to be short all-time highs, and it's also hard to trade into all-time highs because the information is very, very new. You have to take it step by step, so that's why I want to decrease risk. I don't love trading into all-time highs. I got to decrease risk and be extra patient to wait for something that creates a very visible imbalance to get active on. So the way I see it, pretty much the only level I'm going to be looking at is around that 55.60 today on the SPOOs to see how they want to react in and around there. And then we'll go from there and try to decipher what kind of pressure is going on in the market, especially after a holiday yesterday. So we have a question here. So if you guys have any questions, let me know. But tomorrow we'll be going live in the morning, right? We'll be doing the morning room live here on the stream, and you guys can come and join us on YouTube. That's going to be interesting. So if you guys, I'm not really sure how to answer this question. Confusing pattern, but the last market go my direction. How can I solve it? I don't know what, I'm not 100% sure how to answer your question, but again, you guys can check us out at community.tradeproacademy.com or bring your questions tomorrow to the stream. We're going to be streaming live starting at 9 a.m. into 11 a.m. Eastern Time. And on Tuesday, we'll be doing a webinar just for you guys talking about trading edges and trading systems. So I'll see you guys tomorrow. Jump into community.tradeproacademy.com, and I'm going to open up the live room and see what is going on. So I'll see you guys.